Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with the micro most bullish scenario where we have a finished zigzag structure to the downside and we now look for continuation in an impulsive move. In this particular scenario, these two candles to the downside had the most amount of volume. And if one was looking for a more bearish scenario, where this is a wave 1, 2, looking for a 3, 4, 5 to the downside, then after a wave 3, which carries the most volume, you want to see a wave 4, and then eventually a wave 5 on lower volume. However, for a wave 4, the maximum retracement level is the 0.5 Fibonacci taken from the high to the low, and this candle over here invalidates a wave 4 as it retraced too high towards the golden pocket, and therefore it increases the probabilities for price to continue to range instead of looking for much lower prices based on this scenario. Now you can see that wave C went to the 1 to the 1.236, found support, which is the most common target for a wave C, taken from the high to the low of A to the high of wave B, which is very nice. And then after this wave C, you look for continuation and then a wave 1, 2, and eventually higher prices to come. The problem in this scenario, however, is this wick on my chart, and surprise, surprise, for once, Bybit does not have that wick on the chart over here, which is interesting because most commonly charts align with one another and these type of wicks tend to get filled. So that is something to keep in mind and increases probabilities that price will visit this low at least once more. Now this low was also made on the 1 hour order block, which is over here sitting between 33k and 33.3k, so that is some support which has been hit for the second time now. And just below price we also have this support over here, the key level, which is the beginning of this gap over here. So this is the 1 hour order block and this is the beginning of the gap, and usually the high of a gap does give support at least once. Another reason for the probabilities of this not yet being an impulsive move to the upside was this bounce from the low of wave C, because you can count this as a 1, 2, 3, 4 and then a wave 5. The problem, however, is, which I mentioned yesterday, there's overlap between 1 and 4, and wave 3 is the shortest, which is not allowed in any diagonal structure, and this increases the probabilities to take the local low at least once more, which on my chart has happened over here, but on other charts not yet at least. Now if we then go to the second scenario I like to show you, then it is an extended corrective structure. So here we're looking for a WXY, ABC zigzag in wave W, any corrective structure in a wave X, and then we're looking for a 3-wave structure to the downside in a wave Y. Because wave W is then an ABC to the downside, wave Y in a sideways double combo cannot be a zigzag. So for wave Y, we then have to either look for a triangle or we have to look for a flat structure. Those are the two options then for wave Y. Now common targets for wave X are between the 382 and the 886, which is a very big area, so we just have to wait patiently and observe what price does here. But if we look at some resistance to the upside, then you can see the blue box over here, and the blue box contains of a double top, high number 1 and high number 2 over here, so we have a bit of a double top. We have the golden pocket, which is taken from the high to the low of W, and we also have the value area high of this range over here, which you see right here. The blue line is in the middle of the golden pocket and just above the double top that we have. So that could be interesting resistance for price on top of the golden pocket, sitting between 34.4k and 34.5k, basically for potentially the high of X and then a move to the downside in wave Y, where if wave X would go towards the golden pocket, then the most common target for wave Y, 1 to the 1.236, taken from the high to the low of W to the potential high of X, is then sitting over here between 32.7k and 32.1k, which as you can see is right on top of this key level, which is right on top of the 1 hour gap for potential support, additional support, and continuation to the upside. And also in this scenario, you would very nicely fill the wick, the inefficiency that I have on my chart as well, which of course makes this scenario extra interesting. Now an alternative is that this can still become a flat, an ABC, but price at the moment isn't high enough for me to consider it just yet. But because the first structure is a 3-wave structure, you can have a WXY, which is a 3-wave structure, or you can have an ABC, which also starts with a 3, another 3, but then you get a 5 wave move. So that is something we have to observe, especially in case price manages to get above resistance over here. If we look at the most bearish scenario, then we are looking for a diagonal where the ABC zigzag is only part of a wave 1, and then you have a leading diagonal where all of the waves are going to be zigzag structures, especially wave 2 and wave 4 have to be zigzags. The problem then, of course, with this wave 2 is again this wick, because if you have a zigzag in wave 2, you want to see an ABC, and in wave 2 and wave 4, a zigzag or family of the zigzag, so a double or triple, is a must. But you can't then take the low over here, because if this is an ABC, B is not allowed to take the low of wave A in a zigzag. Now on my chart, it took the low. On other charts, it didn't take the low, but then it really lowers the probabilities for this scenario to be correct, which then increases probabilities that we are going to take these highs at least once more. Now for a wave 2, the golden pocket to the 886 and the contracting diagonal is the most common target area before then you expect to move down in a wave 3, but again, price here took the low, lowers the probabilities for this particular scenario. I already opened this folder once, but just to go more in depth, again, we have the key level as support. We also on other charts now have a triple bottom. Of course, on my chart, we have this wick, but on some other charts, you have a low number 1, low number 2, and then low number 3, which leads to a triple bottom, which is like a magnet for price as well. The 1 hour order block is support, and above price we have the value area high as well as the double top as current resistance. If we look at the CVD divergences, then these bearish CVD divergences played out, pushing price to the downside, taking this low, which is very nice. So we can remove this one from the chart right now. And then more locally, first of all, bullish CVD between this low and the higher low, but preferably you're going to see bullish CVDs on the right side of a new high or a new low. And this one has a pivot on the left and a pivot of the right of the new high over there. So that is not ideal. So if we look on the right side of this high, then you can see that price has some bullish CVD divergences as well as bearish CVD divergences, which is interesting. Now, if price would move towards the upside a little bit more, takes the double top and hits the golden pocket, then the bearish CVD divergences, high probability, they're just going to move to the right, so that you can get this scenario where you are moving towards the upside, hitting the resistance, grabbing the liquidity, then moving to the downside in then either a flat ABC, of course, or a triangle, but eventually moving towards that target to the downside. We have to, of course, observe the reaction, as a potential flat scenario is not yet off the cards. But the CVD divergences might lead to this scenario, which is very interesting indeed. Now we do have news today, but it's very late, 10:35 p.m. Central European time, so it will take a while till we're there. So let's see what price does during the day, but it can increase volatility, which is important to know. And then finally, the probabilities of the different scenarios. Well, based on the analysis, currently the bear bull scenario for me is the highest probability scenario, which is a range that is going to extend in then a WXY, preferably taking the double top here, reaching the golden pocket. Observe the reaction, see what happens here, right? You want to see proof of support or proof of resistance. We don't YOLO FOMO catch knives on this channel. You know, trade sensible, have good risk management, have a plan, entry requirements, see what happens. And if there is some proof of resistance, this can be interesting for then a move to the downside, where I'll be looking for that target for wave Y on top of the key level at 32.5k. Of course, there's still the potential ABC to keep in mind in case we pass this resistance towards the upside, but currently, from an Elliott Wave perspective, this is the highest probability scenario on the micro time frame. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.